What's going on, my financial friends? It's your friend Jack here, and today it is Monday, which means we are going to be buying some stocks towards our tax-free savings account. If you guys are new to the channel, definitely check out last week's episode or the whole playlist of this series, but we're going to get right into it today. We're going to be investing like we do every single week into our tax-free savings account, and real quick, I'm going to explain to you the challenge of this playlist and also my journey and what I plan to do in the coming years and how I'm going to be documenting it on this YouTube channel. So first things first, on this YouTube channel, I do post a bunch of financial content and investing content. So if you want to subscribe, definitely do so. But this series mainly is going to be about my tax-free savings account and growing it to $100,000. I am going to be posting videos every single week until I hit at least $100,000. So this could be a very long time, yes, especially with my current income being quite minimal, but hopefully the income grows, and when the income grows, my contributions will also grow, not just in my tax-free savings account, but also my other investments, which I will definitely be documenting on this channel. Right now, it only costs about $500 a month to max out your tax-free savings account, at least mine, but I do have a lot of contribution room still to fill, because if you're not aware, your tax-free savings account contribution room will also go up as you age. You get right now $6,000 a year. This does change as inflation goes up, but right now $6,000 every year is what I'm getting. So next year when I turn 22, I will get another $6,000 onto my, I believe, $23,000 in contribution room, making a total of $29,000 in room, plus all my investments that are in my account. If they grow within the account, dividends and capital gains are going to be added to my contribution room at the end of the year, when it transfers over from December 31st, or is there a 31st in December, to January. Now to explain my investing strategy and my goals for this tax-free savings account. So my main goals are actually to build a dividend portfolio. A lot of these investments that I'm making are dividend yield based investments. I'm going to stay a little bit away from just capital gains or growth stocks, just because I am aiming to, make passive income and have that dividend come in every single month or every single 3 or 4 months, and be able to live off that, or at least pay some bills in the future. And right now I'm just reinvesting all my dividends for the time being, probably for the next decade or so, but eventually I'll be able to not reinvest them, keep them for myself. Once I get my account up to a premium number of $100,000 to $1 million, then I'll be able to actually take those dividends out and live off them essentially if I want to. Or I could keep growing the account, but my main strategy is going to be, for now, investing in higher yield dividend stocks. And today's episode is no exception to that. It's going to be a really fun episode. We're going to be buying some covered calls, ETFs from BMO. Huge fan of these. I've seen them everywhere. Everyone's talking about them, and they are very good for dividend yield, about 7 to 9% dividend yield. And we're going to be looking at one today that does cover some financial institutions here in Canada. But just before we get into this week's stock buys and the specific stocks I'm going to buy, by the way, you can skip ahead to the chapters in the video if you just want to look at that. But before we get to that, I just want to explain that why I'm using a TFSA, right? Because I could use a normal account and I could grow this faster if I were to be able to contribute more money. And the reason I'm using a tax-free savings account, at least for this challenge, is because right now my income is not even exceeding really my contribution limit. I still haven't even reached that limit. Once I do reach that limit and I can easily hit the $6,000 a year, I will also be investing in other assets like another portfolio. And right now I'm also doing 50% crypto for my dollar cost average, meaning every week I spend the same amount on crypto as I do on my stocks. If you're not a fan of crypto, that's okay. But I am very bullish on crypto, meaning I really like crypto. I really think it has a good future in our economy, and I really think it's going to do well in the long term, the next decade or two. So I'm also investing in that pretty heavily. Okay, now we can get into my portfolio and go over to Wealthsimple Trade and take a look at what we're doing today. Here we are on my Wealthsimple. I just added some funds for today's stock buys, and we're going to go back here and we're going to look at my portfolio real quick. Right now it's at $749. Where I think we have about $650 in shares, or $635 in actual shares. purchase in our portfolio, but we're going to look over basically our earnings and what we're looking like so far before we jump into the weekly stock buys. Also, if you missed the other episodes and you want to see why I bought some of these stocks or more information on them, you can go ahead and do that. I'll leave it down below. The whole playlist for my whole journey from first stock to where we are now is going to be there from week 0. So looking at this AQN, right? That's my probably favorite stock I have in here right now, just because I do believe in their long-term growth in terms of the stock and the share price. 1 week they're not looking so hot. They're actually kind of on sale right now. I usually would buy more of them, but I really want to get some covered calls this week. And yeah, we're going to be doing covered calls this week. If they're still down next week, I'll probably buy some more AQN. And you're going to see that over the past 5 years, they've been growing quite nicely. So we're going to go ahead now and look at the other shares in our stocks. We got some Bank of Nova Scotia. This one has a nice yield of 4.6%. And, AQN also has a nice yield of 4% right now because their stock's down quite a bit. And we do have some good yields in this account, but I'm looking at more of a high yield. And covered calls are definitely something that can do that. You're going to see here I have about 8 different covered calls in my watch list. The one we're going to be looking at, I believe, is ZWC, which is a Canadian high dividend covered call ETF. Now this one's yield is 8% right now. Is actually doing very well in terms of dividend yields, and it has been growing for quite a bit of time. This is the one I've had my eyes on for a little bit of time. Someone also mentioned in one of my other videos this specific covered call option, which I did have on my watch list a few weeks ago, but I wasn't too sure about it because I didn't know what a covered call was. Recently, I learned what a covered call was, and I really liked the idea of a covered call because of the high dividend yield. And even if the stock doesn't grow that much, an 8% dividend yield is really impressive and something that I could really enjoy adding to my contribution room every single month, because I believe the stock is a monthly payer. And real quick, I'm going to go check their dividend history and how often they pay dividends, and I'll get back to you guys. So their dividend history actually only goes back to 2017. So it's been about 4 years of them paying dividends. Nothing too crazy. And obviously, you do everything at your own risk. None of this is financial advice. This is all just for entertainment and educational purposes. But they haven't been paying their dividend for that long, meaning there's no guarantee they're going to continue paying it. But I'm pretty young and I'm okay with that. I'm okay with taking a little bit of risk. And obviously the stock isn't as safe as something like Algonquin or something else that isn't quite as, new. And covered calls are a pretty new thing. This stock does pay monthly, by the way. And right now I believe they're paying about 11 cents a month per share, which is very, very good considering their shares right now are priced at $17.74 Canadian. And if you're wondering what a covered call is, what the heck's a covered call? Why is the dividend yield so high? Basically, a covered call, BMO manages your funds in this covered call ETF, and they have holdings, mainly financial holdings, but they have holdings in companies that are already high dividend yields, like that I'm holding personally, and then they put covered calls on these stocks or options where they bet against the stock oftentimes, or they try to sell the stock, or they try to buy the stock at a predicted price. It's kind of confusing. It's either called a put, right, or a call, and these are options. So they do option trading inside the ETF. They do it for you. You just have to invest in this ETF, and then they pay a hefty yield of 7.48% for holding this ETF. So they do pay out a nice yield, and I'm really liking this yield, especially for reinvesting into my account and growing my contribution room. It's something that I really, really am fond of. And they have decreased their dividends in the past 3 years. Back in 2018, they decreased their dividends, and back in 2017, they upped them in 2018 also, and they upped them in 2018 also again. So it has outweighed so far, and they aren't part of the aristocrats or anything, meaning they haven't paid dividends for 5+ years. But with a yield that high, I can't really say no. And we're going to go ahead, and you're looking at the 5-year chart right now, and it looks pretty nice, right? It does look pretty nice. 1-year chart, you're going to see they've grown 22% in the last year after that big hit. But generally, these ETFs do best, or these covered call ETFs do best when the stocks that they're holding are kind of just like stable. They're just stable. And that's very, very common, especially in these holdings that they actually have, because they're holding not very volatile stocks. They're holding big banks. They're holding a lot of not so volatile things that aren't just going to go up or down. And when they do go just a little bit up and a little bit down, that's when these covered calls are going to do best. And that's when their options are going to be most stable and the dividends are going to be very juicy. Obviously, though, they're paying a dividend either way. So being in this ETF is a bit risky, yes, but I like it. I like the idea of a high dividend yield. And for me, it suits my personal needs. Always do your own research and always, understand what you're buying into before you buy it. But this we're going to buy today. We're going to try to buy as much as we can. I got $115. I believe that's 6 shares. Yep, just 6 shares, not 7. 6 shares of this. And we're going to do a market buy actually, because last time I did do a limit buy. If you don't know what a limit buy is, I have a separate video on it, but you can click here and confirm the stock price so you don't lose a few cents here and there. This can be really good, especially on more volatile stocks. But we're just going to do a market buy this time around because I want this stock in my portfolio right now. So 6 shares is what we're buying. We're going to press continue. We're going to confirm the order and we're going to send it out. We're going to see that it's going to come through pretty much right away because it's a market buy. And my portfolio now has 8 different holdings. And this one is more or less financially based. It's an ETF though, meaning it's very diversified in terms of bunch of different stocks, and ETFs are really nice because you don't have to do that much. You don't have to think that hard about it and you just dump some money in. So I really like this ETF. I'm going to be looking at next week Algonquin if it's still low, or next week we're also going to be looking at some of these other ETFs that are on the Toronto Stock Exchange. For example, there is a hedged to Canadian ETF which covers European banks, which is also quite nice, dividend yield of 7.7%. But right now ZWC trading really low at $17. Picked up 6 shares of that, and that is today's stock buy. With all that being said, I hope you guys enjoyed this episode of me buying stocks. I'm very excited for this one, and honestly, I don't know, I just really like the covered calls. I like the idea of them, and I know there's some risk to them, but a little bit of fun here and there, and also a lot of reward if this keeps up, if it goes up, if it just keeps stagnant, if it just keeps on like this, I'll be perfectly fine with that. 8% dividends paid monthly is really nice, even though it's not a capital growth of, let's say, the S&P 500 of, maybe the S&P 500 beats it 10%. 8% of dividends paid monthly is still huge for myself and my situation, and I really like that. And especially in the future, let's say I had a lot of this company, I'd be able to take some money out each month or take these dividends and go pay off some bills if I need to, which is always nice to know. That a bit of safety, sacrificing a few percent maybe, but really like the idea of dividend investing. And if you guys do too, definitely subscribe to the channel. We're going to be doing more dividend investing and stuff like that. Getting those high yields and trying to do it safely, not so volatile. Covered call ETF is probably the way to go for me, at least in my opinion, just because it's an ETF, it's diversified, and it's through BMO. They are pretty reliable and have a lot less chance of going under than something very more volatile like a penny stock or something that hasn't been around for nearly even 3 years that is paying 11% dividends and is on the edge of bankruptcy. So definitely lots of options out there, but this is what we went with today. Hope you guys enjoyed this video. Thank you guys so much for watching. I'll see you guys in the next video. Check out the links down below. There's going to be other videos related to this one and all kinds of cool content. Definitely subscribe if you want to see more. And let me know down in the comments if you guys want Canadian crypto content, because I am basically putting the same amount of money into crypto as I am in my stocks every single week now. That has been a decision I have made. Let me know if you want to know more about that. But thank you guys so much for watching. I'll see you guys in the next video. Once again, peace out. It's been your friend Jack. Keep learning, keep earning.